Hello, everyone. Joshua Hayes at BigWaveTrading.com. Boy, oh boy, I tell you what, uh, I would like to make money easily all the time. I would love for the market just to be a nice, smooth uptrend, 50 above the 200-day simple moving average, nice, smooth, and steady without any interruptions. But that's just not reality. The market's very volatile. But I tell you what we have seen the past, I would say, 8 trading sessions has been nothing short of spectacular. When you look at the KRE and look at what that looks like, when you think about stocks like FRC, SIVB, SBNY, it's been amazing. And it makes you think, I'm surprised that the IWM hasn't full on just completely crashed and capitulated. But while the IWM looks the way it does, the QQQ looks like this. It looks healthy, bullish, something that you want to get long. The SMH, look at this, looks fantastic. The XLC, discretionary stocks, not as good, but still a bullish shape overall. And more importantly, the XLK and the relative strength that it's showing, while the KRE, FAZ, what have you, FAS, IWM, SPY, has just been nothing short of remarkable. But that being said, it's bifurcation. And I know, and I listen, I love big cap growth, tech, those leaders, stocks like, ACLS, ALGM, SMCI. Actually, I have a tab here of true market leaders, MPWR. You can put a buy stop above here. It's a true market leader. There's a free trade idea for you. And if you do it this way, this is where your stop goes. MBLY, you can put a buy stop above here. And if it goes below here, you cut your loss. You position size accordingly. Or if you want to do an arbitrary 5, 7, 8% gain, you got to position size accordingly, but then you use illogical, irrational stops. But it's an idea. AAON, this is a true market leader. You can buy it above right here. Cut your loss if it goes below there. SMCI. But I show you these stocks. ELF, not only ELF, IPAR. I know ULTA is kind of rolling over, but that discretionary area is looking good. AXON, you can put a buy stop above that high. TGLS, same thing. But the IBKR is basically breaking down, but I wanted to show you. If you'll notice, it's breaking below 50, 100, 150, 200 SMA, but you'll notice that they're all properly stacked. Wing still looks good. So right there, 9 true market leaders based on a bunch of fundamental qualities that I personally look for. Didn't even mean to go through those for everybody, but there's 9 trade ideas that you can set up, and trust me, they are true market leaders based on fundamental, technical, and multiple fundamental and technical criteria. Relative strength, return on equity, profit margin, sales growth, earnings growth, estimates, raises, leadership towards its industry group, leadership towards the overall market. So there's some stocks that are holding up while we watch the IWM look like this, which is a very bad look. You just tried to break out here in January and February. You completely rolled it over. We're still holding the late December lows, but the volume pickup, look at let's just pretend like green light is go, red light, stop. Red light for a long time. And I wanted to show you guys this. On a monthly time frame of the IWM, I want you to look at this closely. Let's even go back further because it only goes back to 2002. Look at the chicken money flow on the monthly. It very rarely gets red. Red. Already red. So IWM is screaming risk off, while at the same time, let's put the QQQ in context. On a monthly basis, CMF is still green, still going towards the 0 line, red. And I'm going to tell you guys this. This right here, on a monthly time frame, the time segment volume, has 100% correlated to my biggest and best gains whenever I really slam into long positions, this on a monthly time frame has always been bullish. Now, I wish back in the day Telechart version 20, 23 would have existed, but it did not. But that being said, it now exists. And via doing back testing and my current trading since this product became available, time segment volume lines up. And that's whenever you want to be long these indices. The SPY, you'll notice 1995 to 1998, 2003 to 2005, 2009 to 2011, that 2017 amazing run, 2020 to 21, the IWM, same thing. When it's green, it's been good. Here to here, here to here, here to here. So as you can see, they're all red. Even the QQQ. They're all red. None of them are green. So if you're having trouble on the long side in this market, that is to be expected. We are on a monthly time frame, longer term time frame, bearish. When we're green, green is good. When we're triple green on the monthly, it's even better. Then you want to start going down to lower time frames, the weekly, and look at the DIA. Green, red, green. Mixed. QQQ on the weekly, all green. Okay, so you know where to focus. SPY, green, 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 despite the weakness. Very interesting. IWM, green, green, red, but still a lot of mixed signals. Daily, red, red, red. SPY, red, red, red. DIA, red, red, red. QQQ, green, green, green. So guys, we are dealing with a major bifurcated market. Not only is it best to be long and strong and aggressive on the long side. So if I get grade A signals, I get aggressive long. If I get grade B signals without grade A signals and without clear indication that a market has bottomed, I can't size up until those B signals start working. So until those B signals start working and working better and more, higher quality B signals, I can never get aggressive. So that is the one thing that is saving me on the end of day swing side, is that I'm not getting and have not received a single grade A signal from this October low to the current date here. This is the longest uptrend ever that I have not received what I consider a grade A cancel signal, a grade A great signal regarding low risk, high reward, and a non-cancel name. Grade A via my volume truncation, max green bop, price off support or the 5200-day setting, or any stock really that's made my 4x volume scan, which means it has 4 times average daily volume, from a bottoming hammer candle that I would consider grade A, which means that it's a leading stock in a leading industry group, and we've got a healthy market. That's not bifurcated and mixed. Zero. However, the same moment, I've received a record amount of grade B signals, and I'm still getting them. The thing that has saved me on the end of day side is I continuously get smaller and smaller and smaller, because I got to keep taking the signals to keep that toe in the water feel for the market, because when they start working, I can buy more. I can add size, and I can continue to increase size, and then I'll get a grade A signal. Then I can slam it in. Then I'll get some grade B signals with the market's wind at my back. What is that? QE, quantitative easing by the Fed. We're still under a quantitative tightening cycle. The Fed buying assets on the balance sheet. Did you guys see the balance sheet this past week? Huge, huge, huge uptick. So money, liquidity is coming into the system. Now, if I can get some quantitative easing behind me, we came close, but we're not there yet. If I can get that VIX over 40, we're really, really, really cooking with gas. But so far, I don't have any of the macro or internal indicators that I need to see via the overall market to increase size with grade B signals. What's so funny is that following the session on Thursday by the QQQ, I decided to increase size from already, it's at a record low right now. The amount of capital I'm putting into grade V signals. It's at a record low. It's never been this low because I've never received this many quote, quote, false signals during a market, quote, quote, uptrend off the recent lows. So it's been very, very odd. It's been a very, very odd market. Normally in bad markets, I don't get any signals. If this is a bear market rally, I only get a few signals. But right now, I'm getting too many. But the vast majority aren't working. So I continue to size down as they're not working. So I'm already at a lower level, the lowest level actually ever. But after Thursday's session, that rally was so strong that I told everybody, hey, I'm going to go ahead and increase size a little bit per new long signals by 20%. And if it's a big cap tech growth stock, if I really like the setup, I'll increase size. But following Friday's session, with what the SPY did, with what IWM did on its heavier volume than the day before, I don't care that the QQQ is showing relative strength. One index is not enough. I'm sizing back down already. And on the speculative signals, if they trigger, especially if they're like biotech related, I'll size down even more. So that's where I'm at currently. So with that being said, let's go take a look at the tickets indicator on the SPY and QQQ and wrap this video lesson up. All right, fam, let's wrap it up with the tickets indicator. And I'm going to remind everybody, this indicator has been built out by a member who's a lifetime member, Tickets. This indicator was made by him, and it's available to all quarterly and annual platinum members. So not only do you get all of my trade alerts and ideas and trades that I take before I let you know, before I take them, I let you know exactly what I am doing before I take them. I not only do that end of day and in long term and quarterly, I also do it intraday. I tell everybody what trades I'm going to take before I take them. I tell you exactly where to set your buy stop if you want to join me, where to risk to. If you want to use logical, rational stops, I like to do break-even stops as soon as I'm green right now because of this market. I'm not trading my day trading accounts where normally I slam it 25%, 50%, 66%, 75%, 100% per trade. Right now, I'm at 5, 10%. Normally, 20% is the lowest I go. But even right now, intraday, the dip and rips aren't working. Day 2 and day 3 surges are working, so we're focusing more on there. But even intraday, I'm still making money. This is the only time frame that I can still consistently make money. The TOS educational break-even account took a regular loss, which is a max loss. And because there's been very few that have exploded higher and they keep doing the break-even stops, that is currently under a drawdown, but it's small. I post the profit and loss equity graph on all my social media pages for everybody to check. But all my other accounts are at all-time highs. All my day trading accounts, because I keep using those break-even stops as soon as I'm green. And I take profits on the way up when it starts to extend. So right now we are granular. We're intraday. And if I ever take a day trade, by the way, intraday, that I don't talk about before I take it, as soon as I get out, I post the screenshot as soon as possible because members know by my screenshots. If I get shaken out of a trade for a gain or even for a small loss, and that trade has not hit that logical, rational, intelligent, proper stop, you can put a buy stop above the recent candle high that I got stopped out on or that I cut my losses on, and you can get long. And that worked with CRBP midday on Friday. I did not alert that trade, posted as soon as I got out. If you took that trade with the buy stop parameters, how I teach, you made money. It made a 15% move afterwards. So right now we're granular, intraday. What would get me long on an end of day basis where I'm going to make this video lesson and tell you all that I'm going 25%, 20%, 33% long each new long position, grade A setups all in that E-Trade account that I have specifically designed to go all in on grade A setups only, which has been all cash since the October lows. Stunning, just stunning, shocking. I need things to line up. So I've already showed you the time segment volume on the monthly time frame in the IWM and SPY, showed you how that aligns with proper uptrends. Here's an additional. The more you can stack in favor, QE markets, Fed balance sheet, monthly TSV, Now we're getting to the tickets indicator that we created. When it's above the 0 line on the weekly time frame, no surprise, good things happen. When it's below the 0 line, bad things happen. It also states that anytime the market is above the 50 SMA, especially if it's downtrending, and the tickets indicator is below 0, you do not buy. No shock, SPY has failed. So we know how strong the QQQ is recently, right? What does it look like on a monthly time frame? Okay, we're below the 0 line. Above the 0 line, good things happen. Below the 0 line, bad things happen. We're back above it. We got back below it. Now we're back above it. Now it's not to say that this indicator, this price action can't stay above the 250 and then this indicator goes green. But what we like to see is the tail wagging the dog. We want to see this indicator above 0 while price is below the 50 to get long. It's great if it confirms, and it will confirm that we're in an uptrend, but as for a signal basis, there's nothing here. So the QQQ and SPY are technically bearish. There's no reason to increase size. This indicator has always lined up with periods of uptrends. Here's the IWM going back to 2009. When it's above the 0 line, good things happen. When it's below the 0 line, bad things happen. When it's above the 0 line, good things happen. No shock that it happens to line up with the downtrends and uptrends. So that's on a weekly. So what do we look like on a daily right now? If we look at the daily, the IWM is below the 0 line. That is not bullish. The SPY is coming and going towards the 0 line. That is not bullish, and SPY is not above the 50. So is this what we call a trampoline move, a bounce move? Is this buyable back above the 50? No. You could do it if you want, but with the indicator coming towards the 0 line, not coming towards it well above the 0 line, notice we get below the 50 here. 50 is uptrending. We're still well above the 0 line. That's buyable. That's actionable. This one really isn't, because if this direction continues, even if we bounce further, this indicator should go below the 0 line. How does the QQQ look? Much better. Much better. This one was tricky. This one tells you not to buy, but you can still do it. But right now, the QQQ on the daily is above the 0 line. Now here's my favorite time frame, the hourly. So once again, this would have been great if this indicator, so here's the 50 SMA, goes above the 50 SMA, indicators below the 0 line, come back down, we're below the 50. If this indicator right here would have gone above the 0 line while the QQQ was below this 50, this is buyable. Gets below the 50, which happens to be downtrending, still not above the 0 line. If this would have been above the 0 line, one more time, would have been actionable, risking to this low. And you can see the move that followed. Now, once again, the price has led the indicator. There is no positive divergence here. There is nothing to do, but this confirms in the short term on an hourly basis, the QQQ is good. I show all this because my index that I like the best is the SPY. So if we look at the SPY here, let's see if I can't get further back 20, let's go back 90 days, hourly. Okay, perfect. Okay, so now let's get increase. So you can see here on the hourly, we test it, well above the 0, bounce. Test it, well above the 0, bounce. Test it, even though we're coming down, we're still well above the 0, we bounce. We test it here, but look at what the tickets indicator is doing, getting towards its 0 line. We fail. We get above the 50 here, tickets indicator is now below the 0 line, we fail. We fail. Now we get back above the 50. This time the tickets indicator is below 0. Yes, it worked, but more importantly, a short on the SPY is better when you get above the 200, which is very hard to do with the tickets indicator below 0. This, when you reclaim the 200 on the downside, is a better short than this reclaim would have been a long. Now we're back below the 50, tickets indicators above 0. You get back above the 50, fail. Back above the 50, tickets indicators below 0, fail. So right now, we are not properly aligned. I hope this was a great lesson in educating everybody how we want everything to align. It's very rare, but when everything aligns, slam on the gas on the long side with grade A's and grade B's. If you get signals, when things are not aligned, I have no problem going heavy into grade A signals, but I'm not going to be full throttle. But when it comes to grade B signals, with the current structure that we have in the market, forget it. Small and only smaller until they start working. And until things start working on the end of day swing side, there is no need to force it, because a bear market always ends and a new bull market always starts at some point. The Fed will never be able to stop printing money. The wealth gap is too large. It is only going to continue to increase. They will never be able to stop printing. And by the way, am I a Bitcoin hodl? Bitcoin maximalist? Ooh, I sure am. But at the same time, I don't fight the Fed. So if they want to flood money into the system, once that weekly tickets indicator is above 0, once that monthly TSV is green, I get some grade A signals and even some higher quality grade B signals, we're going to make so much money that as long as you save money and don't lose money in this market right now, you're going to thank me. You can either churn your account right now or wait for easy times, because right now it is not an easy dollar market. It's a hard penny market. All right, everybody. Thank you for watching the video lesson. Sorry, once again, it went too late. Way over time limit. Want to make this 15 minutes or less. Love you guys. Thumbs up, like, share, subscribe, leave a comment. What do you think? Am I right? Am I wrong? Does it really matter? No, because I'm like water. I do what the market tells me to do. We just went from a 6.5% Fed funds future prediction possible in June, July, to now a rate cut is scheduled for July in a matter of 8 days. That's the kind of market we're in right now. Do you like roller coasters? Do you like bucking broncos? Do you like riding a bucking bronco on a roller coaster? Well, then you'll love this market.